Since most people are really doing IUL focused, I want to show you how there's an opportunity, how you can work with this when it arises. And so there's a couple ways that you're going to find annuity customers because you're probably not buying annuity leads. Those are $75 to $80 a piece. So there's a couple ways you're going to find them. Number one, if you do an IUL and they do not qualify, and I've helped many of you kind of get a feel of that an IUL is based on health and annuity is based on wealth. Now, that doesn't mean you can't do an IUL with wealth, but the point is that from qualifying, you just need to have an asset. So I'm going to take it from that perspective. If you're talking to somebody, when does an opportunity arise, and what are the first few steps you need to do to find out, is this something you need to pursue, and how do you get compliant? Okay, because it's just kind of like Medicare. I'm licensed in health. I don't want to do Medicare. What I have to do to be compliant is not what I want to do. Annuities are not that taxing, but they do require more training than just doing an IUL. Okay. So that's just kind of want to throw that out there. So basically, when you're working with somebody, if they do not qualify for an IUL because of a health condition, then if they have money per month, premiums per month, or they have a lump sum, maybe they, like Neal said, maybe your second way you can be talking to them is, hey, how long you worked for that company, how long you been there? You have a 401k, how's that performing? Okay, that's another way to find a potential customer for an annuity based on wealth. So if you do an IUL, that's per month, and these are just some kind of little nuggets here to learn, the health and wealth, and then the monthly qualified or the lump sum, a monthly non-qualified or lump sum qualified. And what that means is if you have a 401k, that's pre-tax dollars. Somebody's been contributing into the 401k, they can do a 1035 exchange. They can roll that over into annuity. You cannot roll over a 401k into an IUL. They have to liquidate. Now that's going to be taxed. Now they have what they call non-qualified funds, so after-tax dollars. So all of this is in training that you have to take. I just am giving you an overview on how you kind of put those different quadrants. So when you find somebody that says, I want a 401k, an IUL, I have a 401k, or I want an IUL for retirement, the first thing you're going to do is you're going to do a discovery call. Okay. And it's the same kind of an IUL discovery. Okay. What appealed to you about that? How did you find out about it? Neal, if you'll put up the little client worksheet, we have an IUL annuity. This is just a really basic initial worksheet. You need to, with annuities, you've got to document. You have to document with best practices, best interest. You have to document the same thing you do with every client. And this is just a really good initial worksheet. What are they looking for? In terms of retirement? Are they looking for asset preservation? Are they looking for lifetime income? These are things for you to make a note for. And there's no reason for you to create the form, just use a form. Now you can tweak this, but what are their goals? And it's IUL and annuity, the same form, but you just want to really find out what their needs are. And so if you say, you know what, this is really what I want to do. I really want to get in this lane. I like IULs and I like annuities. They're similar, but they're different. Usually an IUL is for people that want access to their money. They want to be able to be their own bank. They want to be able to use it. Traditionally, an annuity is not for a while. It's a contract that it is asset preservation. They don't want any loss or risk. They want to take the loss or risk out. They want growth, but they don't need to be their own bank for 7 years, 10 years, 15 years. It is basically an accumulation product. Once it annuitizes, once you fulfill the contract, then you can start pulling money out. So they're two different things, kind of pay me now, pay me later. Okay, so that's kind of an overview. What I want to show you now is you say, okay, what do I do if someone says, I want to get in this space? Because you have to be trained, you have to be what they call compliant. So I'm going to screen share and let's see if I can. Are you all seeing this right now?
Yes.
Okay, so Leanne has this on an email. I have it in a Word doc too. But regardless, before you sell or even solicit an annuity, the National Association of Commissioners, our Commission Association says that you have to have the suitability course. That is a 4-hour required course in every single state except California. They have their own 8-hour suitability course. So you have to do that. Now, how do you do that? And these are the steps here. And I really don't want to get too deep in the weeds here, but all of this, you can go onto Gateway, you go to SureLC, you select training. We walk you through how you take the 4-hour suitability course. Okay. Each state, for the most, except two, have been now what they've added as a best interest. What is in the best interest of the customer? You have to take that 1-hour course also to be compliant. So this tells you how to do that. Then what you want to do is, obviously, if you're going to write in different, same thing as an IUL, you have to have your non-resident license, or obviously you can write where you are a resident. But when you go to SureLC, what's really great about it is when you start this process with annuities, it will tell you when you're compliant in each state. And I can show you that. Let me see if I can get this up without too much issue. Yeah, I'm going to do this real quick. Bear with me. I'm logging into Gateway so I can show you this.
Hey, and MJ, let me just add that the purpose of an annuity, a lot of people are very nervous about the stock market. They're showing how Jeff Bezos sold, $2 billion worth of stock. Jamie Dimon, who's the CEO of JP Morgan Chase, has never sold ever any JP Morgan stock. He just sold 145 million. So people are reading this stuff and they're getting nervous about it. And so all they want to do is get their 401k out of the stock market into something that's safe. And that's where the annuity comes in.
Nice. Okay, so what I did is I've gone to Gateway, and when you go to Gateway on the left-hand side, it says SureLC. So you click that, you log into SureLC, and this is a really great way to get started. You scroll down to CE and training, and then again, this is all on and then it's going to show you, what annuity states. Now, these annuity states would wherever you're licensed, let's say you're licensed in 5 states, they're all going to be this is going to be like gray or black, these states, until you complete your suitability course. And then once you're compliant, as you can see here, they turn green. Then what happens, you have to go back and do your best interest on most of them. And I've got cheats in my information, how you can sign up for 5 or all the states you're licensed at once and do the best interest course one time versus doing it 50 times. Don't do that. If you're going to do it, click all the states you're licensed in and do the course one time. But this will show you then.
MJ, you're in 18 states.
Oh, yeah, it takes a lot of training to keep these compliant. So these are the states. And then once you get your best interest, now you have to, this is every other year, every 2 years when you do your continued education, you have to take an annuity, courses with everything. But when I wanted to do California, I had to specifically take an 8-hour course for California so that state would be compliant. Now, what you will see is on best interest, there is no CA. California has that course in their 8-hour suitability. So the point is, if you're going to do this, use the SureLC, because see where it says monitored accounts, LIMRA, Quest CE, Reg Ed. if you want to do training, you just pick one of those because those are monitored. And when you take the course, it will automatically update your SureLC, which then tells the carriers you're compliant. Does that make sense? There's no reason to chase down training or certificates.
Yeah, and MJ, let me make a point I forgot to make before.
That's okay.
If this is overwhelming to you guys and you come across a client and you don't want to do all this training or you're not licensed in that state, just call, like if you're on Francis's team, call Francis. If you're on Oscar's team, call Oscar. If you're on our team, call MJ. And like what I do, I just do a split, say,
Yeah.
MJ, you're contracted, you've gone through all the training. I haven't. I've done a little bit of the training. You just go and do the annuity and we'll do a split on it.
Yeah,
So
if you're going to be a one and done, I get it. But if this is something you want to add to your portfolio, your wheelhouse, we have within FFL, we've got systems in place. So this is just saying, obviously, number one, got to get licensed in that state you're going to write. Number two, you have to be compliant with the training. Now, number three, and this goes back to, let me go back to what I was doing before on this, and I'm sorry, I'm not really smooth like Neal.
oh yeah, right. It's sheer panic from my side.
No, when I have to
Taking too
do
much
all these
credit.
screen shares, I usually like hang up on my clients. So you don't have to be good at this, you just have to be persistent. So okay, so back to this. Like do a discovery call. We just do a discovery call. So if someone says, if you run across somebody who says, gosh, I have money in my 401k, gosh, I have $30,000 in my savings account. It doesn't matter if it's qualified or non-qualified. You can do annuities with both. You do a basic discovery call and you use a form, whatever Francis has, any form. We have one in our chat. You just have to find out what are they looking for. If there's say retirement, okay, when are you going to retire? How much money do you have right now? What kind of streams of income? What's the gap? What are you looking for? Are you looking for a lump sum? Deep dive into it because then, you're going to have to figure out what is the solution for them. And that's when you can reach out to Francis, reach out to me. Let's have a quick conversation. But let me tell you how I teach every one of our agents the resource that we have. And this is a great resource. When you know everything, the birthday of the client, what their goal is, how much money they have, if it's a lump sum, do they need to turn on a lifetime income or are they looking for asset accumulation, asset preservation? You put as much information on that sheet. Why? Because we have a corporate entity that can take that information for you, look at all the carriers we have, tell you what is the best company and the best product, and then they will send you everything, an illustration, how to get contracted, where to go for training, all of it. And you can just, all you do is you go back to Gateway, okay? And it's ask an expert on the left-hand side where SureLC was, you just say ask an expert. And so let me stop this now and I'm going to show you where that takes you to. So this takes you to, where's my ask an expert? Bear with me. Bear with me.
Is it inside your gateway? Is that where you're going?
No, I had to just pull it up. Now let me hit share. Share. You know how it is trying to juggle 5 or 6. Can y'all see that okay?
Yes.
When you go into Gateway, left-hand side, ask an expert. It used to be, well, it still is. It's going to take you to FFL, AMS. That was Advanced Market Sales. Now it is
Simplified Retirement
Simply
Solution.
Retirement Solutions. Okay, they just rebranded it. You can register if you've never done anything. See now over here on the right-hand side, complete the new annuity and IUL training. It's going to take you to the same place that Leanne always has you go to, which is the training camp, which is also on Gateway on the left-hand side to complete your training for IULs and annuities. So it all kind of comes back to the same thing. But you can register. All you need to do is your NPN number and go from there. You don't have to, have any carriers that are annuity carriers, whatever, but you're gonna log in and then you fill out a form. What is your client looking for? How old are they? What's their birthday? What is their goal? And you put as much information as you can. If they're talking to other people, I had a gentleman I've been working with since April, and he just flat out said yesterday, I want my money out in 4 years. Well, that's not really an index annuity contract. They're basically 7, 10, and 15 years, but we found the SRS team found an incredible fixed annuity that's over 5%. If we do 5 years, it's a 4.75, which right now banks, and he don't want it at a bank because banks are a little risky. So you use them as a resource to search all of our companies and their products. You don't need to be the go-to on that. Don't put that burden on yourself. They will then email you in 24 to 48 hours. You have to give yourself time. A complete email with the illustration. Again, like I said, what you need to do. If you have to get product training with that company, like you have to get contracted and then you have to have product training. So you really want to make sure that you've given yourself enough time with this customer to, be prepared. That's why if you need to lean on Francis or me, do that. That's why we're here.
Well, and the difference, MJ, like if someone's telling one of the agents, hey, I've got 300 grand in a 401k, I got 300 grand in a money market, I want to get it out of there into an insurance company where it's safe. We can doing a Athene illustration is just the easiest thing.
Right. We can do all that ahead of time. We can help you with that if that's what they're looking for. If they're just looking for high growth, accumulation, asset preservation. If you're on an IUL with somebody and they get declined, you just immediately pivot while you're on National Life Group to their monthly because you know what they're looking at. If they've been talking about putting $1,000 or 1,500 or 5,000 in a month, then you're already contracted. Now, you do need to be you do need to have the suitability. That does not change. Just because you're contracted with National Life Group to do IULs, you still need to do the suitability and all that. And that's what I'm saying. If you're going to be doing IULs with National Life Group, you might want to go ahead and have this done, the first two steps in what we're talking about. But that's really kind of what I just wanted to give an overview. It is in let me stop screen sharing. It is in this
Can we upload that document to the chat?
if you tell me how.
Or maybe Leanne, does Leanne have it? Oh,
Yeah.
Leanne will do it. By the way, a lot of people are new. You don't understand the word suitability. I didn't either. So what happened back years ago, a bunch of aggressive insurance agents started to write annuities on basically, if I could generalize, little old ladies in Florida, and they took the last
Seniors.
they
Yeah.
had and they put them into annuities, and then all of a sudden the women were strapped for cash and they couldn't touch the annuity. Might have been a 10-year annuity. So they changed all that by putting suitability requirements that just say that this can't be your last penny. You have to have other resources. And so they put oh, thank you, Leanne. So Leanne put that document in the chat, everybody.
So that's what I'm saying. When you look at an IUL, you have to qualify on health. You have to be healthy to be, approved for an IUL. An annuity, it has to be wealth. And that just means you have to have liquidity. We cannot be taking your last dollars. You have to have different assets, and you're probably going to put a certain percentage of it. And that's what Neal's talking about. There is a worksheet that's part of the application you have to fill out. What are their liquid assets? What's their monthly income? What's their monthly debt? This is part of the application. That's called suitability. Are they suitable for this product? And then when you go through the training and certification on that, you actually go through that process on what all that means. So it's just a really great I like the step. It kind of takes the burden off of us because we don't have to sit and decide if this is the right thing. Based on their goals and based on the tools that we have, then we find out a lot of times with SRS, what's the best company and what's the best strategy. Don't put that on yourself. Wait till you've done these for a while and you'll know. But like today, I resubmitted to SRS. I said, I'm revisiting with this customer. This is what he said yesterday. He absolutely wants to take all of his money out of everything in 4 years. The contract of a fixed indexed annuity won't work the way we're doing it. And so we got a great option. They came back with something I'd never written before with a company I've never written an annuity before. And that services the customer. I don't need to be all things to all people. I just need to know where to go to ask the right questions. Does that make sense?
Got it. Perfect. So, so let's say you've worked with an IUL customer and they can't qualify, but they said, hey, I want to contribute $1,000 a month. So you're bummed, okay? Because, that's a nice policy. So what we're going to have Francis do is he's going to cover what you do in that situation. There's only really one company that I know of. So Francis, why don't you unmute and
Yep, I'm here.
show everybody. Yeah.
I believe F&G has a product also, but I haven't ever used it. So I'm familiar with National Life Group's product. And so let me share my
And
screen.
Francis, I've done one of those. It's an income product, meaning you have a rider on it they want you to utilize to have lifetime income. That's the benefit of that one. And it's a great income annuity.
Okay. So basically what Neal was saying is you've got someone who's you're trying to help them with an IUL, but for whatever reason they have a felony, their health isn't good, just they get declined for whatever reason, but they still are trying to put money away. They're wanting to do something where they can put more money away. So this is a great solution for them. Obviously you just go to your illustrations, pick your state. We normally would do the IUL right here. We're just going to go to the bottom here, and you have these two choices: fit secure growth and fit select income. It sounds like what MJ was saying. F&G has a product that you can do what's called a flexible premium, or it's not a lump sum. So these are non-lump sum products. Okay, you can do a lump sum in them, and then add to them along the way. Most annuity products, it's a lump sum. That's it. It sits there for 5 years, 7 years, 10 years, 15 years. It grows the whole time. They can take a percentage out each year. That's about it. And then, it's a safe place for their money to grow. Okay. Well, this is where somebody wants to put in $100 a month or whatever. I like to fit secure growth. Most people aren't putting a ton of money into it for it to really turn into any kind of income. So this one has an income rider, select income. This one doesn't. So I always select it. Again, you can roll somebody's IRA, 401k, that would become qualified money. Then actually, no.
Let's do non-qualified,
Yeah.
since it's a
This
client.
would all be non-qualified. So let's just erase what I just said. Let's forget about any kind of rollovers, qualified and non-qualified. We can talk about that at another time, because you don't get to mix the two. And so since this isn't qualified, money always comes from an employer who's holding the taxes and all that stuff. So this is just after they get paid, money's in their checking account. It's extra money they're trying to put away, and that's non-qualified money. Okay. However, you can't, just to not go too far into the weeds, you can set this up as a qualified, and you would set it up as an IRA and do a Roth. You can turn this into a Roth IRA. And that's how you want to do it. And that would be as close to an IUL as possible, meaning the growth, it's going to grow. and you can take the money out tax-free. So, but right now we're just going to talk about non-qualified, meaning it's just an investment. It's just money that's growing.
And let's
So
do
you
the
come,
age at like 30.
all right. So you got a 30-year-old male here, and then you're just going to come down to funding withdrawals. Okay. They can put a lump sum in. Hey, Francis, I got 25 grand. I want to stick into that, but I'd also like to put $500 a month in it. Okay. Well, we're going to change this one to monthly. And so now that's going to give them $25,000 year one, $500 a month. And you know what? I just want to do that till I'm 60, so just same way, age 60. And, so you can kind of show them how this is going to grow. Now you have all these different allocations here. Okay. And that's the one thing when you get into annuities, is how do you do, what do you allocate? Well, their S&P point to point has, used to have a very low cap. Now it's 11% cap. And so it's actually pretty good. I think the last one I did this one at 34. And then I came down to these here. I only do ones that don't have a charge. So this has a charge, this has a charge, this has a charge. And the reason I don't like the charges is because we always say this has a 0% floor. Well, if you put somebody into an allocation that has a charge, they're not going to have a 0% floor. They're going to have a negative 1% or whatever. I mean, it's going to cost them 1%. So I just don't like doing that because we tout the IULs as, no charge. I don't like this one because it's a 2.25% cap. Who wants a cap that low? So I select these two here. So I would do 33% here and 33% here. And now we have 100%. So your allocation has to equal 100. Sometimes I won't even, I used to not do this S&P, and I would just do 50 and 50. Okay. What's weird is this is all National Life Group. The IUL has totally different indexes than the annuity.
Right.
Don't know why, don't know why we don't have a U.S. pay setter in here or a balanced, fund or whatever they call that. They used to call the Credit Suisse. So I don't really do the withdrawals because I'm just trying to show them how this works, So then I'm just going to come over here and hit quick view. And with the $25,000 drop in, that's plus the $500 a month. That's $31,000 going in year one. Then $500 a month. I always, show them how much their annual premium is going to be. We stop putting that in at age 60. And then, you come back here.
Hey, Francis, how do they come up with those rates? Are those
Okay.
the last?
So if you look up here,
Yeah.
okay, this is the non-guaranteed most recent 10 years. You could also do this as a guaranteed, show them what a guaranteed is going to look like, and that's 0% return. So, but that's technically when we do an annuity, we have to show them the 0%. Actually, in IUL also, we show them that, hey, there is going to be a 0% floor. So it only accumulates the money they put into it, and that's it. But I use the most recent 10 years. I don't use the highest. I don't use the lowest. I just use the most recent 10 years.
Okay, cool.
It is the one that defaults to it. So it's just, but I show them. I say, look, these interest rates, they could be all mixed up. They're going to be based on just a random selection of the last 10 years. And so, you have the nice thing is if you look here, there's almost no zeros. I mean, so in the last 10 years, they didn't have a zero. So with those allocations that we did, they've been able to at least have a 0.64 or 3.1 or, whatever. Now there's not these huge, you only have there's no 30% returns. There's no, with that extra participation rate and stuff, you don't have these huge returns.
But it illustrates so much better than an IUL, which is at 6.42%. I mean, look at that.
Correct. Correct. So you're going to go through the same information. Here's the interest that's accredited each year based on these estimated or hypothetical returns. We can't predict the future, but this is past. This is coming from past. And then you're going to same thing. You're going to talk about the accumulation value, cash value, which is the surrender value. Don't know why they don't use the same terminology, but this is your surrender value, meaning this is all the money they're going to give them if they want to cash out year 8. Okay. But year 11 or year 10 in this one, they match. Okay. So they can cash out the same amount that's accumulated. So this is identical to how an IUL works. There is a 10-year surrender period. Again, there's no fees when it comes to an annuity. And that's any annuity, Athene, National Life Group, F&G, Americo, you name it, any of the annuities, just like the IUL. Okay, so if they cash out early, yeah, it might have grown to 63,000, but they're only going to be able to cash out 60,000. Okay. The other thing is annuities are life insurance products, so they go around probate. That's why it has a death benefit here. The death benefit is always going to be the accumulation value. There is no surrender charge. There's no surrender penalty if you die. Your beneficiaries get the full accumulation value. So this number, the death benefit, will always match your accumulation value. And then the cash value is, again, going to have a surrender charge in it. And after that, everything's equal from then on. And it'll just, people can leave it in here and let this thing keep accumulating. You can show them that, hey, you can start taking money out, or when you're 8, if they're looking to do this for leave a legacy. Well, if you pass at age 85, you're leaving $6.1 million behind. And, you put however much money into this, about 200,000, over the lifetime of it. But most likely they're doing this for an income, and you would probably set up and actually do the withdrawal, which, is easy enough, whether you do it on this one or you do this is the Fit Secure Growth. It does allow withdrawals. The Fit Secure Income, you have to do a withdrawal. You got to calculate some kind of withdrawal. So here I would just do the free withdrawal amount, and it's going to start when you stop. It's going to start right in the beginning. So age 32, but you could say, hey, I want to do this when I'm 60, and see what it actually throws out. Wow, that's a pretty, I did year 60. So I was about to say 700,000 a year. That's pretty good.
Big money.
Yeah, do age 60.
So you need that A, everybody. So if you didn't see what I did here, that's A, 60 for age. Everybody can't see my screen, correct?
Yeah, we can see it.
It didn't like this. So whenever you have this red X, that's one nice thing about National Life Group. You just hover over it. Premium payments, withdrawals are not allowed in the same year. Okay, so
61. Yeah.
We got to do 61.
Gotcha.
And then it'll show basically the free withdrawal, whatever that is. But there is no cost. You can withdraw it all at this point. I just didn't want to put a percentage in there. So just kind of gives you, looks like it's putting some percentage in there.
Awesome.
But anyways.
Beautiful.
Yeah, so it's a great product. The other drawback to it, but hey, something's better than nothing. Okay, you're helping someone out. This is when they can't qualify for an IUL. You're only going to get paid 6% of that first year. So if this was normally most people aren't putting in 25,000, so this would probably be more realistic. Would be someone who's just putting $500 a month in. And so you're going to get paid 6% of 6,000. Okay. However, you do make like 2.5%, maybe something like that. Maybe almost, I think it's like 2 or 2.5 for the next 10 years. So over 10 years, it's about the same amount of income that you're going to receive. as if you wrote a $500 IUL. Okay. But the $500 IUL you get year one, $500 a month IUL. This $500 a month annuity is going to take you 10 years to receive that same amount of money. But hey, something better than nothing. It helps them, it helps you. You write enough of these and you'll have nice little residuals coming in, every month, etc. Any questions?
Yeah, let's take about 10 minutes worth of questions. If anybody has anything, stop sharing.
I start. Neal, you said that earlier that 9.4 out of 10 stick with the IULs, right?
Yeah.
Is that number similar with annuities, or is it lower?
I would think it'd be the same or higher.
99%.
Yeah. People don't cancel annuities.
Okay. Yeah, I just wanted to know, because if you're getting that in payments throughout the 10 years instead of getting it up front, then you want to make sure that you're getting that consistently is it every month, every year? How does that get paid?
MJ, you want to jump on
Well,
that?
that's on the one he's talking about, the monthly premium. When you're doing Francis is talking about National Life Group. They are basically our go-to monthly premium annuity, $500 a month, $1,000. Athene, the other companies are lump sum. Somebody has a 401k, somebody has savings of 300, 400, 500. They're dumping it 30,000. It doesn't have to be that big. But a one-time lump sum on an Athene product is different. You're going to get, when you start out, about 4.5%, and it's paid in full. It's different payment with that company and that product than what Francis is talking about.
Mm-hmm. Okay.
But it is nice to get a lump sum check,
But they do stay. These people understand, because when they have to go through suitability, they understand this is a contract for retirement. They understand this is not a, just the here today, gone tomorrow kind of a proposition.
Excellent. Any other questions?
Hey, Neal, I got a question.
Yeah, go ahead, Jason.
Hey, Francis, on that product you're just showing, is there any part of that death benefit that is taxable?
So the growth, it's going to be handled like any in an estate, like in a 401k or something, where the taxable part is going to be taxed. So not sure exactly how they come up with the base, of how much the principal went in and what is the growth. I'm not the tax attorney or whatever, but yeah, it's subject to, if it's non-qualified and it's not a Roth of any sort, then it's going to be subject to tax to the beneficiaries.
Okay. Second question, if you don't mind. If you set that up, whether they have an initial lump sum they put in there or not, the monthly amount, if they set it up for 500 a month, I mean, surely is it okay for them to expand that to include more than that 500 a month?
Yeah, the good thing about that variable premium annuity, that fit growth, is all they have to do is $100 a month and $5,000 for the life of the annuity, which is it's a standard 10-year annuity. Okay. And that's all they have to put in. They could put way more than that. They could start putting payments into it, stop paying into it. They could start paying back again. I mean, there's so much flexibility.
And as far as accessibility, is it kind of mirror
10%, like the free withdrawal, there's going to be a withdrawal charge unless they stay within that 10% of the accumulation value. They're able to withdraw out free. After that, then depends on what year they're in, there's going to be a withdrawal charge.
Okay. Thank you.
Yep.
All right. Thanks, Jason. Lazaro, you got your hand up. Hey, sir.
Yeah, how you doing, guys? I had a question it's not regarding the product, it's actually more of networking. So for Francis and Neal, when you guys meet someone new, like let's say in the gym or any other activity, how do you present yourself of what you do? So like if they ask you, hey, what do you do for a living? what do you say without sounding cheesy?
Well, you won't catch Francis and I in a gym.
Well, okay. Anyway, I was like in a restaurant or getting a
Right.
referral.
Well,
Bad example.
everybody does it different, right? So, like for me, I like to say that I'm a wealth preservation specialist because they go, "What in the heck is that?" Well, what we do is we transfer money out of 401ks into safer accounts with
Oh, I think
safe
that's
growth, but can't lose any money. So whatever it is, I mean, I don't know what you say, Francis. I try not to say I sell life insurance. That's just not.
right. Or insurance agent. I don't
Well,
like those
yeah.
words.
Or you could say you set up tax-free retirement programs.
Yeah, that's usually what I help people set up tax-free retirement. And then, well, how does that work? If they're interested, and then that leads into that, or it leads into nothing. Yeah.
I like that one. Thank you.
You bet. We got maybe 5 more minutes. If anybody else has a question, we can grab a couple. If not, we'll wrap it up.
I have one more.
Yeah, go ahead, Oscar.
So I was trying to run different illustrations. One of the leads that I have, um, he wants to basically do the search on his own. However, I mentioned to him that we have different companies and whatnot. So I feel like I want to take it upon myself to do the research and show him that National Life Group is going to be the best product. I'm only able to run 2 different illustrations. That's with National Life Group and with Ethos, but I don't know how to do any others. So is there some type of tool that we can use or that I can use where I can see different companies, or is that not possible?
I don't think so. I don't know, but there's a product called WinFlex that we used to do our illustrations on Mutual Omaha, but
That's awful.
you have to register and you got to be part of that company. So
I tried doing that, and then it asks me for my writing number for all of these different companies that I'm contracted with, and I think I put that on the chat.
Yeah.
It's a pain. It's a pain in the neck.
Yeah, we have some companies that like we have some corporate marketing materials from National Life Group that we could send you and you could research it, but it's really hard to do. I mean, as far as doing an illustration, they're all going to illustrate because of that issue that they passed back in last March, that everybody, for the most part, there are some differences, but they're small, has to be at 6.42%. That's just an estimate. It's really the performance of the product that
Right.
counts. And
Yeah.
you can go on National Life Group and you can download credited interest in the what section is that in? But they'll actually give you every year dating back. I found it all the way back to 2011, what they actually by month deposited into the client's accounts. And so that's really where the rubber meets the road. I mean, what have they actually interest credited?
I need to find that so I can actually send it to him so he can see it, because
Oscar, if I could give you a huge, just what I would do.
Mhm.
Again, we have a corporate entity that this is all they do. They know all of our 30 carriers. They know every product. They can do every illustration. If you go to the Ask an Expert and just fill out the form, what it is your client is looking, his objection or his objectives, and what kind of money he's looking for, that he's shopping for other people, what they actually will send you an email that gives you marketing information, resources, illustrations, and it takes the pressure off you being a know-it-all from 30 companies. This is why we have this corporate entity that does that. And then you can go back and forth with Lauren and ask her, now that dialogue's open, because Lauren is the one that does that with annuities, and she'll give you customer brochures, product information. She'll give you all the links that you need to support that customer based on the information you put in on that form. Does that make sense?
Okay, so how do I get this? How do I get this form?
Okay. Did you download that document? Okay, what you do, go to Gateway. You're going to log into Gateway and you're going to click Ask an Expert and register. And in the chat, actually, I will email you the steps that we talked about today, but that's the cheat sheet. Is go to Gateway, on the left-hand side, Ask an Expert, register, click Annuity, and then fill out your customer's name, their birthday, what they're looking for, big picture, and then as much information, what he shared with you that he's talking to other agents about, other companies.
Is he looking for an annuity or an IUL?
IUL.
Okay, then click IUL.
Okay, gotcha.
There's annuity and IUL. You can click which one you're looking for. And they literally will send you, they look at all of them, every company that we have that has an annuity. Excuse me, I keep saying annuity. An IUL. Well, they do the same with annuity, but on an IUL, and they will show you they actually have an illustration that they will do for this customer. So you don't have to get contracted. It's really, that's why they do it.
That's what I need.
It's a great tool.
And one last thing, like, this is why we have the slide in here, because the way I do it is I say, look, we handle a company that has been around since 1848. They've had clients on the Titanic, the Hindenburg. Their first death claim was a guy pursuing his goals and dreams in the Great California Gold Rush, which took place from 1848 to 1855. They're number one in IULs for the last 3 consecutive years, and they have one of the highest financial ratings in the industry.
I went through this with him.
And he didn't believe it?
Yeah, so I did. Say it again.
And he didn't believe it?
It's not that he didn't believe it. He's really young. Well, not really young. He's younger. He's saying I think he's 30 or 31. And then he said that he wanted to do some research. So what I went back into that particular picture you have there where it says 40. I didn't say 40, but I said, we have access to many other different carriers. I can do the comparison for you if you need me to. Maybe I shouldn't have said that. But I wanted to get it off his hands. You know what I mean?
You know what you could do? You could go show him a comparison between like a Americo policy like we did last week, how some companies, raise up the insurance real high, and how National Life Group doesn't do that. They perform, and you can do a side-by-side comparison. But if he's going to do his, I've had guys like that, and they want to put in $100 a month.
Yeah. No, he wants to do 500.
Okay.
He has a baby on the way, so he's definitely has his head in the right place.
Okay, cool. We're 2 minutes after 8, so one last question. Let's see.
It wasn't a question. I was actually suggesting to ask you. I know I'm not one to talk since I haven't written that many policies, but I do talk to a lot of like young people, and sometimes, at least me back in the day, when I would say things like, "Hey, what's another carrier?" That's just as a way to ease my way out of it, right? To say no. So something I would personally tell them is like, "Hey, what are you looking for a company to help you feel comfortable?" Because the facts are there. National's the best one. It's been in business for amount of years, and when making a decision of choosing a carrier, you want to make a company that's reliable. So I would just say what will help them feel more comfortable, so that way you're not overworking yourself. And like Neal said, he's probably just trying to put $100 away. Probably not going to end up doing it.
I like that. What are you looking for specifically? So, in a company, and have them articulate it. So that's good advice. Appreciate that. Mike,
Thanks, guys.
Okay. Finish up real quick, Mike, with a quick question. Make it a good one. We'll end on this.
Quick question is, if you found your ideal like whale of a client, as far as what are they looking to do as far as structure the annuity and what's their life situation where an annuity is the right product and they're also going to be a great avatar for this type of product?
Well, I have an answer on that. I'm going to say it's somebody that's in their 50s, 60s, and they have a large 401k, and they're just scared to death that the stock market's going to crash. And because history says it's going to, we're kind of on a parallel track to 2008, and they want to protect it. It's protection. A lot of guys run around, Mike, and they'll just say it's a safe money account. Your money's protected, and it has a reasonable rate of return. So that's the avatar. They're just scared to death because they're looking at retirement, and if their 401k drops by 30%, they're screwed.
Yeah, so a protection move for and they have significant amounts in their qualified accounts, like 401k, IRA.
Yeah.
All right.
What do you say?
Asset preservation is the way they say it on asset preservation, and it could be non-qualified. They could just have $600,000 or $700,000 in the bank, but they want to preserve it, but they want the opportunity for growth, safe growth. So when the gains are realized, it locks it in and they can't lose it. So it's asset preservation, asset accumulation.
Awesome. Thank you.
And then the last thing, I can't forget the golden question, which is when you're talking to somebody about an IUL, you say, do you have anything else that acts like life insurance? 401k, Roth IRA? Ask those questions, because you could be talking to somebody that could be a $500,000 401k client. And if you never ask, you'll never find out. And so you're kind of a financial advisor to a degree. And so don't be embarrassed. You're not being nosy. You're just doing your job, because your job is to put them into something that has a zero floor, whether it's an annuity or an IUL.
And that is what the suitability for annuities. You have to ask those questions because those are on the application, and you don't want the application to be the first time you're asking them.
So last call, we've got some great, we've got the weekly meetings with all the links. If you need it, just click on it and you download it. We got the IUL client worksheet. And then we have that. Actually, I need to download that annuity first steps, because I've never seen that document. So anyways, if you need them, download them. And let's see, I have another meeting to go to. Okay, Wendy bolted when coming to carriers. Okay. When comparing carriers, yeah, there are companies like Mutual Omaha that have a 15-year surrender value. Same with Americo. National Life Group has a 10-year. So what that means is that your accumulation bucket and what you can actually borrow doesn't, with the other companies, they don't become dollar for dollar until the 15th year. National Life Group is the 10th year.